Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Today we're going to be taking a look at, if you couldn't tell by the background, a 5-minute candle-by-candle analysis, just looking at the psychology of what's going on inside of the candles along the way to help us better understand what the market's doing and understand what stories it's trying to tell us. And starting off the gate here, we can see that there is a very nice perpetual drive to the downside that did kind of stall out for a little bit going into the very end of the day. Really, it ended with a nice drive down, and then we have a pretty small gap to the upside, right inside of the previous area where sellers would have taken it short off of that large bear bar. Now, noting that we opened with a small gap to the upside and the first candle immediately dove down and filled that gap, this is going to be kind of an idea of, well, is this going to be the bottom here and we rotate back to the upside, or is this going to be the start of a little bit further momentum down? Given that it went sideways here so bad, it might not be a surprise to see them dig into some of these wicks that they left behind here, maybe down into the 80s to 82s. So it may want to go a little bit further, but all things considered, this is a really crazy kind of bear bar that starts things off in more of a choppy sideways nature, really. As we get bar 2 continues to close down through the settlement price with another strong bear, but you know, again, where we're coming back to, this is an area where a lot of bulls may still be coming in. We've only got the first candle of the day. As far as the first 5-minute POC is concerned, looking at that first area, they put it right up at the top. That's pretty telling. If we drag it now to the second candle of the day, we can see that it's now down at the lows. This is demonstrating that buyers may be trying to come in down on the bottom. If that's going to be the case, we should see a rotation back to the upside, get some nice bull bars, get above settlement, and maybe kind of go from there. Right now, though, we're closing underneath settlement, and even though the POC shifted down, it closed underneath it. I can't go long right this second, that's for sure. It's going to be difficult to want to do much else. There is a possibility of a short, I guess. If you wanted to short the bear bar and then, you know, with a wide old stop above the top, even then, a scalper's objective fits inside the lows. It's just really aggressive given the location. We get more continuation to the downside. The short scalp does line up and fits pretty well. We have another drive down, and the POC is staying put. It has not moved to the downside, but now we have 3 very strong bear bars in sequence. The next thing that I want to see is, well, we have 3 strong bear bars, but is there any candle gapping? And there is not. Now, we are closing firmly underneath settlement, but if the market's going to work its way down, we already know that the seller's objective is down here. We just talked about that. That's the scalper's target, which they closed above, further demonstrating that these sellers might not necessarily have as much strength as they're making it out to be. This could just be a quick little dive down to grab this little low and find support off of the 77s to 76s and reject it right back up again. But with 3 bear bars, I can't be the first one to the bull party anymore. There's too much strength. We get more continuation to the downside, and we're beginning, although there aren't any candle gaps yet, we are seeing to the tick ones, and that is leading us to believe that the sell side may be picking up a little bit of speed. If we move the POC a little bit further forward, we can see that they are still closing underneath it. The POC is back here at 79.50. So given that they have been unable to close above this area, the bulls still have absolutely no reason to believe they have any control. And now we're getting a strong close underneath the swing low, and they're still staying under the POC. There is a little bit of a caveat to be noted. These candle gaps from close to open are gapping up while the market is dropping lower. That could be a little bit of an inside heads up in terms of what the intentions are, but right now the bears are still heavily down. The market's staying underneath the POC. There's absolutely zero reason for bulls to want to do anything. And in fact, if the market does come back above the previous candle's high, there'll likely be sellers there who are looking for a continuation scalp to the downside. Or not. We get another candle to the downside. This time, though, we're gapping from close to open down. So that bullishness that might have been kind of hiding in wait here, well, they're kind of losing their grip a little bit now. We're breaking away a little bit further, and more importantly, we're also creating some downward candle gap objectives. Downward candle gap objectives at the moment would be down to right there at 68. And so long as that remains open, the market will still try to keep churning its way to the downside. Let's make this a little bit thicker so we don't lose sight. There we go. We can keep on going, but sellers are still driving to the downside. And we have the candle gap objective filled. Now notice the candle closes above it. Very interesting. But this does actually create another candle gap. So the bears might not be done yet. If we measure from the top to the bottom, this gives us a projected candle gap target now all the way down here at 61.50. As far as things are concerned, this move is very aggressively down. We have the market, which is still staying underneath the POC. There's no changes, really. We haven't even had a break above a previous candle's high. Realistically, a lot of traders will be looking for that. We've got a gap to defend, so scalpers will be looking for a rejection off of the previous candle's high, likely for a rotation back down. Doesn't even have to make a new low, which is good because we did hit inside targets already. But further down, it makes a lot of sense for sellers to give it a shot if they're able to. Candle gaps still suggesting that the market should fall further. We get a very strong bull bar back to the upside. It closes above the entry point, and if we're looking at this from a seller who sold directly on top of that bear bar's high, or maybe one tick above that bear bar's high, from an actual risk perspective, they've had to risk 162.50, well, plus one tick. So the overall risk parameters to the downside still has a scalper's objective easily within the lows, and further objectives, although I doubt it fits, a 2-to-1 would be just underneath the base. More likely, if we're looking for good old fib numbers, 1.618, we've talked about these areas before, that's just underneath the low. That would be the next zone of interest for the market to try to continue down. Either way, sellers are still trying to drive lower. They did fill in this gap, but it's still open. And as long as it stays open, they have a reason to believe the downside. Now, the gap did close a little bit, so that means that the downside objective is, technically speaking, back to where the earlier gap was, right at the bottom. So that takes away the possibility of it being able to break a little bit lower, but at least a bit more down makes sense. Again, another close to open gap to the downside now. We had a big bear bar to the downside, heavy bear sentiment coming in here, and a lot of sellers may even be trying to get this to rotate further down. We can see that the market is still maintaining pressure underneath the POCs. It couldn't even close above it. So with this bearishness, a lot of sellers may opt to try to get that thing going. But we've got to be real here. The objective that was the candle gap telling us that we could keep going to the downside dried up. That actually landed on the inside of a previous candle gap's objective, which proved itself. So this move down here, does it make sense to want to be a seller? Maybe. But if I'm going to be a seller down here, I've got to really look at this and say, well, what's going to be my risk tolerances? I'm either risking above this bear bar, which I don't think really qualifies as a scalper. There's too much risks going on. We're hitting major objectives. So the other consideration then would be that you are going to be a swing trader. But where do you put your stop? Above this little bitty swing here, I guess. But as far as a 2-to-1 goes, that doesn't really line anything up. There's nothing to work with here. I don't want to lose my spot, so let me put a purple mark on there. But if we go backward a little ways... Is there anything? There we go. We're finally starting to come back into that zone where before on, what was this, the 22nd of 7/22, they had a nice little bounce off the 43, 57s, 58s. So with the market doing what it is now, let me see if I can get back. I don't want to go too far. There we go. With the market in doing what it's doing, there is still a potential for it to go a little bit further down, but it's got to stay underneath these lows to keep the move going. And realistically, it's going to be a tough time getting this thing to drive a little bit lower, selling way down here. They're still maintaining good pressure below the POCs. Everything's good. They just have to stay underneath 68 next. Well, I mean, technically, right, they trigger in the bear bars, and I mean, they closed on top of 68. That's a bit of a bummer. Sellers might not be too happy with that, especially considering the fact that the bears really would have wanted some continuation off of that. The next thing that we're going to have to pay attention to, given that the sellers have obviously failed, is if the market comes back to this zone, do we find support here? That would suggest that these sellers are exiting at break even, and that would add even more problems that we really don't want to see. We do also have a bottom-weighted POC, which is shifting lower. The market hasn't closed above it yet, but seeing all of these problems perpetuate on top of a major bear objective makes a lot of sense that we at least go sideways for a little bit, if not maybe a little bit of a bounce. or a lot of bit of a bounce. Wow. Huge move to the upside. And notice what they did. They came one tick away, or technically 2 ticks to get them filled. I know my luck. To actually get the shorts who sold underneath that bear bar out. That means that we have ourselves a full-fledged trap. We've got ourselves a trap. Scalpers haven't even been able to get their objectives. Perfect. So as far as the upside now, this is starting to squeeze away, and shorts could very, very easily be stuck. It's incredibly far up, and I really don't want to be a buyer up here, but it would be nice to buy a little bit of a pullback. Maybe a retest of the 69.75s, even back down to the previous opens and closes here at 72. Just something that's a little bit further down rather than buying way the heck up here. Not to say that there's anything wrong with it, but it's just, that's a lot of risk, and it's going to be a tough one. Doesn't really matter though. They follow through with a jumbotron candle to the upside. This does also create bullish candle gapping to the upside. We are beginning to separate away, and the POC was left behind all the way down here at 72.75. What a perfect spot for the market to come back to. If we're looking at it from a candle gap objective, from the bottom to where they have been able to close, that gives us upside objectives, which should likely be able to reach out to the 43.8650s. Traders don't necessarily want to buy way the heck up here, but buying a pullback, that would look pretty good. Buying below a previous bull bar, buying a dip back into the 20 or the 72s to 74s, that's going to be the spot of interest. Sellers are stuck. We know that. So the next pullback should not be very deep, and it probably won't even close in this gap because the shorts are stuck. So we get a small little bitty inside bear bar, and notice that actually creates a secondary gap to the upside, although less important because it really didn't make any more headway. This is an inside bar, which, may try to trigger down. That might be a nice trap if they go down and then up with a bull engulfing candle. Could be a fantastic little bear trap to get it going. Giant bear bar to the downside and closing in some of this gapping. So we can narrow this in a little bit, which means that we can modify where the market is expected to go, just a little bit closer in. But as far as this is considered, we are getting a beautiful pullback. This is the previous gap that we left behind. The previous POCs down here in this big blue box is also the previous zone of interest in terms of the reversal from a candle gap. This is a major zone, but notice that we might also be creating its own bearish candle gapping to the downside. So given the fact that this may be creating some of its own candle gapping to the downside, we got to be a little bit careful. Got a nice bull bar bounce, very nice bull bar bounce demonstrating good support, but it only made a low at 74. There's still some candle gapping to the downside, so at the very least we have to assume that the sellers are going to be able to make back down to like 76.50. That would be coming back down to the candle gapping on the inside for the bears to complete their objectives, and that would also allow the bulls to reload in a zone of interest that's now been proven. This has narrowed in a little bit more, so we have to remeasure this gap from the bottom to the closest, and unfortunately that means that the highs now are going to be up at 82.75. We still have, whoops, I didn't mean to delete that there. We still have a reason to believe that the bulls will keep this going to the upside, but their targets are going to be a little bit narrower now. They've lost a bit of their grip. We can't expect them to continue churning through the highs here if they aren't able to hold on very well. Nice little bear bar rejection that does close in all of the gapping to the downside. So what does that tell us? Well, there's not really any reason for the sellers to have to go down anymore, that's for sure. All of the candle gapping in the opposite side is gone. So as far as the level of support, this is where a lot of sellers are going to be looking at this like, hey, wait a minute, this is a second sell. They can take this as a selling opportunity back to the downside to get a continuation leg lower. But what do we know about this? This completed major objectives to the downside. So a lot of traders, depending on their aggression, will look to buy into that sell signal with a small stop and a larger reward back to the upside. That would be another way to kind of get a smaller swing trade inside of this to go back the opposite direction. We got to make sure it fits. It does. So if they can get a little bit of a dip down into those 76.50s, that would be an aggressive trade, but it's a swing. We just have to make sure that we're 36% likely, and given the context and the support that is still open for the bulls and the bears projection, which already closed in, we have a reason to believe it. Wow, all in one. Okay, so they immediately bounce off of that bear trigger. The bears are immediately wrong, and we get a gigantic bull engulfing candle to the upside. Here again, a lot of traders are going to be looking for a continuation up, but what just happened? All of it in one shot. Remember, the candle gap objective narrowed in. So the job's kind of done. It doesn't have to keep going further up, and it's running into some resistance at the gap. Its settlement price is 83.75. It did close above it, technically speaking, so they've got at least a reason to believe short term that it could be going. But given the way that this is lining up, it's going to be really tough to buy at the top. If you're going to buy way up here, the only way to really make it work, outside of floating a stop underneath this candle, which is going to be treacherous, would be floating a stop way farther back underneath the lows. And if you're going to be doing that, even a scalper's objective is above the high. It just doesn't make sense to buy way the heck up here. There's got to be a pullback. Wow, a little bit of a gap to the upside, but massive bear bar to the downside. And sellers, this time around, were just dunked on this last one. And a lot of times when they get a secondary attempt, notice where this is. This is a better entry than the one before. Anytime that there's a situation where the S&P is offering up a better entry, it's usually a trap. The market doesn't just hand out freebies for nothing. That doesn't mean that this can't keep going to the downside. If shorts were interested, this would make a lot more sense to the downside because the candle gap objectives for the bulls is done, settlement prices are still holding as resistance, and we are back into the previous 5-minute bar, which is trying to pressure back down. Very nice momentum lower. This would make more sense for the sellers to try to get it going down. And look where the scalper's target is, right? I don't believe in coincidences. The scalper's target now, selling underneath this bear bar, is the break even for the earlier shorts. I mean, how many things can you stack up in one place? So it makes a lot of sense for the sellers to try to drive this down and finish off that objective. We get nice continuation down. They close underneath the entry point. They did back up on it a little bit from an actual risk. It's already there, but the wider risk, they're still looking for that move down to finish off and allow those earlier sellers to get out of break even if they're able to. The bulls don't have any candle gapping. All of their objectives are done. The bears have all of their objectives done, and now it's going into 11 o'clock. They came back, retested that again. Wow, look at that rejection off of the gap pricing. The candle gap price further demonstrating more response and closing back down underneath the entry point. Even more conviction. Sellers may choose to opt to go for a scalper's objective, which this did close above. But again, the wider one is still open if they're trying to get it to go just a bit further. Otherwise, a lot of the scalps, they've already been filled. We do get the continuation down. They do. What a shock. Would have never guessed. Allow them out at break even and we get a bounce back up. Still closing underneath that entry point though. More bear bars back down, and we'll just kind of chop through this since we're getting closer to the end of the day anyway. And now we finally have a continuation back up, and it looks like a very strong reversal is starting to take place here. Yep, there it goes. So really, really interesting day of back and forth where the sellers were trying and trying and trying, but they were kind of trying too late. They were trying to chase the move to the downside when in reality the downside move has already met all of its objectives. It doesn't make any sense, and if they tried, they ended up getting trapped. Really, really good example. Hopefully you found this one useful, interesting, entertaining, and if you have any comments, questions, concerns, anything like that, drop those in the comments below, or if you have a more detailed response that you're looking for, you can always shoot me an email, jhb@ssftg.com. That's going to do it. Until the next one, enjoy, rest up, and we'll talk to you all then. Thanks.